Yeah, good morning, everyone. My name is Rashmi Shah from Simplicity. Uh, I'm doing this webinar from Dallas, but this webinar is only for people in India and for investors in India, and we are not marketing any of these products or any services for people living in US and Canada. Uh, so with this note, let me start the today's event. I appreciate everyone taking out time to attend this event, and I'm going to talk about what are the new trends emerging after the first global lockdown. I would put it this way: what are the new trends which are emerging after the first and the last global lockdown? We are not going to see this kind of a lockdown again in our lifetime. Let's be very clear about it. Uh, so now this global lockdown started with the coronavirus in the month of Jan and Feb. It started as a health crisis. So the COVID-19 started in the last month of December. The news started coming up, and in January it started as a health crisis, and then the momentum picked up, and it became an economic crisis as more and more economies started to lock down things. And then the next step of the crisis became a political crisis. Every country had political issues. We see that in every country the political leadership is under pressure because the people's life are getting affected both financially and mentally and physically, everything, correct? Uh, so that becomes a survival crisis for, it turned into a survival crisis for the government, survival crisis for the businesses, and survival for human beings and poor people. So all this has led to a massive innovation and way of looking at things very differently. So whether you are living in India, America, China, any other country, everyone is trying different experiments and finding out new ways of how we manage this crisis and how we come out of it. So there is going to be a massive innovation happening. Uh, New things are going to emerge. Let me give you another example that the internet was came into place because of the World War II. So the World War II was a human tragedy, but it unleashed a lot of innovations, and that led to the computer boom after 20 years, 25 years, and there were so many new discoveries happen. Same thing is going to be with the COVID-19 situation. We are going to see a lot of new things coming up in the world over a period of next few years. So the current status today is COVID-19, as I said, it became a health crisis, became an economic crisis. Now it's a political crisis, and every country is trying to figure it out. How do we restart the economy? In the human history, as we all know, the world economy was never shut down. Like 70% of the world economy had come to a standstill. That has never happened before. And now restarting that whole global economic engine is a challenge, and that's what every country is figuring it out. And that how this will lead to the financial markets in next 6 months and 1 year, I'm going to talk about that. And the one bright spot of whole this thing is telecommunication sector and the IT sector, correct? So the 5G and telecommunication sector is going to unleash a lot of disruption and new things over a period of next 5 to 10 years. And this is also this COVID crisis. Every country is looking inward and externally with the previous political tie-ups, and they're redrawing the global demand and supply chain logistics. So every country, every company is looking at how to change that demand and how to manage that new demand and how to manage the supply chain logistics, and which is very interesting, which I'm going to share about that in the current part of the presentation. And so talking about innovation, is it easy to implement innovation? Now, innovation is an idea. So Today we are in this phase here, correct? In the idea development phase. So the ideas started coming up in the month of January, February. We'll do this, we'll do that, and then some of those ideas went to a development phase, and now they are going into market preparation phase. So we are still here, and every idea is not going to be a commercially success. Some of the ideas will die down in the development phase, or most of them will die down, and a few will come into commercial phase. And when it comes here, the benefits of the economy we see. So this period is going to be next 5 to 10 years. We are going to see unleash new sectors, new industries, new companies coming up, and they're benefiting immensely out of this. And that's what we have to watch out for. And we'll see this COVID-19 thing is going to rechange the future of certain industries and companies and businesses. And how they're going to do that, I'm going to share some insights. What I see from here in US and the other companies. Now, again, financial markets is based on psychology, one valuation. Valuation is based on psychology of expectations. So expectations play a very important role in our life. So I'll give you another example. Expectation, if your expectations are high, and even if you do a good performance, people are still not happy. But when your expectations are extremely low, and even if you do reasonably well, you're happy. The same thing happens in the financial and stock market. So currently, if you look at this, the expectation in the world is that 90% of the economies in the world will be going into recession this year. And they are saying recession or depression or whatever it is, correct? Now, this kind of negative or low expectation we had seen last time was in 1930s and 1940s. So that time also it was about 75%. This time we are around 90%. So even if we do 20% or 30% and better, so even if what I'm saying is only if 60 or 70% of economies go into recession, it will be considered a very good, because we did better than the worst expectations, and that's why the stock markets will, or financial markets will boom. So many times you must be seeing when very good results comes, the stocks crash, and when very bad results comes, the stock goes up. So why does that happen? So again, I'm saying expectations play a very good, important role in determining the price of an asset. So just now, currently, the expectations are very, very low. And because of that negative, low expectations, even if the companies survive and they have a plan of restarting their businesses, the stock prices will go up. And that's what we have been observing in last 2-3 months. And I'll share more data on that insights, how that plays out. So keep in mind the cycle, and you need to understand the psychology of expectations, that just now it's extremely negative, and which is a good news, I would put it this way. Then other thing which we see in the world today, that because of the role social media and the technology plays, the bad news spreads very fast. So here are some of the WhatsApp messages or pictures I get on my friends and clients and this. So you see the stream of bad news is coming everywhere, correct? Now, the other thing I'll talk about humans. It's very easy for anyone to talk bad about somebody else. It takes an effort to talk good about something. So, in the same way, it's very easy for the bad news to spread. It's difficult for good news to spread. And just now, the bad news or pessimistic scenario is spreading like wildfire. So that's also, I take it in a positive way. When this kind of extreme negative news is there, everything is collapsing, the world is not going to end. The world economy is going to survive. Yes, it's unfortunate a few people are going to die, but it's very unfortunate and sad, but 99.9% of us are going to survive, and we are going to consume, and we'll need products, we'll need food, we'll go for vacation in the future, and the economies are going to revive. So that's the positive side of it. And so the year 2020 is we are resetting the whole world economy. Now, let me give you an example, other way of looking at it. If somebody started a new business in 2019, he would have got impacted this year. But if somebody starts a new business today, he or when he starts a new business today, he already factors in all the bad news and he's prepared to meet those challenges. The chances of that person who starts a business today doing better are 50 to 75% more than the person who started the business last year. So the same goes about investments. So if somebody had invested in 2019, that didn't had factored in the COVID-19 situation. But if you make some investments today, it factors in all the bad news, what is happening today. So 2020 is a year where the whole world economy is reset. So if you start rebuilding your portfolio or investments from this year, it's like 2008, 2001, 1987, 1994. If somebody starts building their portfolio in those years, they did pretty good for the next few years. So 2020 is a year we'll all remember in our life for next 20 years. We'll say, oh, this was the year where I should have done this, correct? So I look this as a positive way. The other thing is the trends and innovations. They change from country to country. Why they change country to country is developed economy has a different problem. America has a different problem than India has, correct? So every economy is different, and they have so different kinds of innovations happening in different economies. So I'll throw light on some of those trends. Now, why we need to understand that? So I'll just share some data with you. So if you take developed economies, here the per capita income is $60,000 in America. In India, the per capita income is less than $2,000 per person. Now, when you have a $2,000 income per person in India, $1,500 goes in your basic food, education, clothing, shelter, basic needs. So that is a non-discretionary. The person doesn't have any discretion where he's going to spend. Only $500 he can spend on vacation or leisure activities. So 75% expenses, he has no control on it. It's a fixed expense. Whereas in case of America, the fixed expense of when you earn $60,000, the fixed expense of discretionary expense is only $15,000 to $18,000. The rest is non-discretionary. He can buy a cruise, go for a cruise. He can go for international trip. So the US has more, the demand for non-discretionary is less than discretionary, correct? So discretionary expense is a very large portion, and which has got very badly hit in coronavirus because people have stopped taking vacations and they started staying home. So the US economy got hit by demand destruction, whereas in India 75% was expenses was already on survival. So those expenses are already there. So in India, the problem got hit by supply chain, how we deliver the foods, how we deliver groceries, how we deliver the basic items, medicines to everyone. So that was the issue. So it was a supply side problem in India. In America, there is a demand side problem. The supply side problem was not there. Here, supply chain logistics in America, roads, transportation, or airlines completely never stopped. In India, everything stopped. You could not travel between Pune and Bombay. In US, that was never an issue. US was never under a complete lockdown. I could go, means I live in Dallas, and we could go out every day, and I could travel interstate, intercity. Airlines were all open. They were never shut down completely like India. So here the problem in America was a demand problem. In India, it was a supply problem. So we need to understand that. So more innovation is happening here on the supply side, and here it's happening on the demand side. So I'll give you another example. If you take where the innovation is happening more. So this is US. The total GDP of US is $22 trillion. And in India is $2.5 trillion. This is India's GDP. Now, if you take, this is the discretionary expenses. This non-discretionary is so much. So people going to Las Vegas, people going to Niagara Falls, people traveling abroad, people buying a cruise vacation, people buying RVs, expensive boats, and so those expenses were high, and this got cut and it came down to here. So this much demand of 50% of US economy got hit here. Whereas in India, only this much was the discretionary expense, discretionary expense, non-discretionary was here. This never got hit. So the economy which got severely impacted was US than India, and that's what happened. And now, as we start the economy, the focus is here. The focus is here, and that's why America spent 50% of their annual GDP as a fiscal debt. Came with stimulus, correct? India didn't come with that kind of a big stimulus. The America came with that kind of a large stimulus, and they're trying to rebuild that economy. Now, if I'll show you how this translates into the financial and stock market in next few slides. Now, so what are the trends we have been emerging now? So what trends I saw in America is acceleration of telemedicine. So I'll give you, this was the biggest trend I saw in US. Telemedicine means you don't have to go and meet a physical doctor. Sitting at home on your computer, you consult a physician and they give. So I have an insurance. My insurance says if I go to physically see a doctor, I have to pay $100 from my pocket. But if I consult a doctor on my insurance through my laptop or internet, I get free service. I don't pay a penny out of it. Now, you go and meet a doctor only when that is absolutely necessary. So this has picked up big time. So there is a stock called Teledoc, a company which provides this kind of services. That stock was $50, has gone to $200 in just span of 4 months. Now, this kind of new trend I'm seeing, which has emerged in America. Now, in India, everybody doesn't use computers, everybody doesn't use smartphones. So this trend is yet to emerge, but it will eventually come there over a period of next few years. So you will see, even here, you're going to meet a doctor and there are 20 patients waiting, you can get COVID-19, correct? Even doctors are scared to see patients. So in America, what happened is you don't have to go and meet, except for certain physical, like a dentist or ophthalmologist, so there you have to go and meet a physical doctor. But in most of the cases, you don't have to do that. That is the first trend I saw. Then digitalization has moved 10 years ahead. So what was going to happen in next 10 years has happened this year. Every company realized that, I need to have completely digitalized. So I give you a classic example of simplicity. We were 100% digitalized before COVID-19 happened. We didn't know that this is going to happen. But to scale up our operations, we are 100%. There were no physical transactions with any of our clients. We were completely online. So when this disruption happened, it was very smooth for us. We till today, we don't feel any need for going to office, and every client of ours is served from anywhere in the world, which was not there in most of the cases who were still doing physical transactions. Now, this kind of stuff has happened worldwide. Many companies and many businesses realized that they didn't invest properly in digitalization, and that has moved forward. So cloud computing has become a basic need. So other example I'll give you. See, I'm doing today a webinar sitting in Dallas and you guys in India watching it. Now this is through cloud, correct? This is through internet, and this webinar is going to be stored on YouTube channel and you can watch it later on. So this is called cloud computing. It's not going to be saved on my computer. It's going to be saved in the cloud. Now this is a very new trend, and this is going to catch up even faster. Now, which are the two biggest cloud computing companies in the world? Microsoft and Amazon. They are benefiting immensely. Every business you don't require a computer server in your office. You require just a PC, and that laptop you can connect to anywhere in the world. So this is another trend which I'm seeing. Now, I'll give you what demonetization could not do. COVID-19 has done. What I mean by that, so let's say if you wanted to buy some groceries in COVID-19 and order online, you couldn't pay cash. You had to pay digital money, correct? Or if they cash on delivery, some of them are doing that, but the most convenient way was shopping online, correct? Paying online. So physical cash need. In America, nobody takes cash. You have to pay everything on a card payment. So the objective of demonetization was that only, correct? They wanted more money to circulate through the banking channels and credit cards and debit cards. Um, Still, many people didn't accept that, but now everyone realized that every business needs to be that way. So that has happened. It has moved fast. I've seen a very fast movement changes there. Wealth management has become global and digital. Now, previously, we most of us used to invest in physical investments, paper documents, and we used to invest only in the local economy. Now, wealth management is global. You need to invest in India, outside India, to protect your wealth, and that you can do only digitally and only if you are global, correct? So that new trend, this is a massive new trend is happening everywhere in India. I see that tourism and international travel will innovate. Now I'm going to talk more about that in my second part of this presentation. International travel and tourism is one of the largest employment generator in the world. If you combine these two, I think they employ almost 15% of the manpower anywhere in the world, right from restaurants to airlines to everything put together, maybe 20%. So now that sector has been very badly hit. So now to get that into business back, they all are innovating, and that changes. We are going to see that sales and marketing roles have changed drastically. So I'll give you an example. Previously, every company had salespeople. They had to meet their customers, travel. Now you don't require that. You have WebEx meeting. You have meeting. Google Hangouts meeting, you do webinars like us, and you meet your customers and get your transactions done. So the need for physical salesmen, a lot of salespeople are going to lose jobs worldwide, and they need to change. And big companies are going to realize that. So there is going to be massive change happening there. The other, how many of you know that which is the biggest industry, employment generator industry in America? You know that? Education is the number one. In India, construction was the number one employer. In America, it's the education which is the number one employer. Now that sector has been hit very badly, and it's going to be more digital. In India, education is the fourth largest employer. In America, it's the number one largest employer, and this is going to change from physical to online training. Now, when you teach online, you have to be more practical. You have to give more examples and more real life things, and that's only that students learn that way. In a classroom, it was more theoretical. So the quality of education is drastically going to change and improve. It's going to improve. So you will see a lot of things changing there. Then shopping and eating has gone online. By eating means online means you can order food online. 10 years back, who would have imagined that I can order food online? In my childhood, I never expected that you can order food online. Now you can order anything, correct? It started with pizza. Now it's you can order any food, dosa, idli, anything online. You can do that. Now this is a big change, and you are going to see even more and more things happening in that front. And our outlook towards real estate is going to change. Commercial real estate is going to take a very big hit everywhere because the need for business space is going to be less. Big offices is going to be less, and everything is going to change in that. So these are the 10 major trends I'm going to see. We are seeing this, and it's going to have impact on all our investments, business, careers, portfolios, and we have to look at that way. Now, coming back to so where does India stand in all this, correct? So now what is happening in India? India is attracting a lot of FDI investments because one of the biggest growth spots in the world is today is India, and with the kind of geopolitical things happening between US and China, India is in a sweet spot. So we'll see a lot of American companies and technology, research, innovation, all those kind of companies coming to invest in India, and we'll see that. Now, if we do more reforms, so these three things, we need the faster we do reforms, India is going to grow faster. Now, other thing I'd like to share with the kind of liquidity we see in America, same kind of liquidity was in 2008. So what happened in 2008? In 2008, when the crisis happened, the US government did a $2 trillion a stimulus package for next 3 years. So interest rates had come down to 0.5% that time, and so the dollar, which was 55 in 2008, went down to 40 rupees in 2011. So the rupee appreciated by almost 15 rupees in that time, and then it went back to 65 after interest rates started going up after 2012. Now, same thing is going to happen this time. The dollar, which is 76 today, as the Fed, US Fed has clearly mentioned that they are not going to increase the interest rates for next 2 years, and they're going to support the global economy and the US economy. And so a lot of money is going to go to emerging economies like India, and which has a strong balance sheet. Now, so rupee is going to appreciate. Rupee, I won't be surprised if rupee comes down to, dollar comes down to 65, and eventually it'll again come back to 80. But it'll, in the short term, next 1 year, rupee is going to appreciate. So that is going to happen. The Indian companies have to increase focus on their supply chain logistics. So we'll see a lot of changes there. Now we'll see innovation in the field of IT, banking, and healthcare, and of course, quality of companies like Hindustan Lever, Nestle, Dabur, they will do well. So the focus is going to be there in India. So this is the trend I see as far as India is concerned. Now coming back to the sectors, so I'll show you in a different way how this global trend. So if you see in last 3 months, so you have taken the data on healthcare. So here this is Indian healthcare pharma sector has gone up 44% from 15th March, whereas in US it has gone 34% up. So if you take the pharma stocks in US went up 34%, the pharma stocks in India went 44% up. The IT stocks went up only 17% in India, but in US it has gone up by 45%. Now FMCG stocks have gone up by only 11%. In US it's gone by 20%. So why this? So I'll explain you. If you see the trend, US people never used to stop. They used to buy food on day-to-day basis, and 40% of Americans were used to eating out food every day, morning and evening, every day. They never cook. Now with this COVID-19, they were forced to cook this time because the restaurants were closed for 2 weeks in the initial period. So they all had to buy more food and consumer staples. So those stocks rallied the first. So that's why they had an outperformance. Whereas in India's case, we are still used to stocking 1 month or 2 months groceries, correct? Traditional families, they stock groceries for 6 months. So there was not such a massive spurt in demand like what you saw in US compared to in India compared to US. So they are underperformed here. But in India, the pharmaceutical sector, the US removed all the FDA's restrictions, so exports went up, correct? And that's why, so you can see a clear trend here why sector-wise performance is going to be there. Now this performance is going to continue. Indian IT sector will not outperform US IT sector because Indian IT sector is focused more on labor-oriented, so service-oriented. They don't create technology, whereas US companies create technology. So US technology firms are going to outperform Indian technology firms. So you need to understand. So this is the trend we are seeing. Now I'll show you another trend. Now, if you look at the other sectors like small cap, banking, and materials, India, it went up 18%, but in US it has bounced back 40%. Banking has gone up only 5%, US has gone by 27%. Commodities has gone up by 18%, but in US got 38%. Why? Why such a big difference? Because, the US economy started reopening from April 15th. We are starting reopening on 15th June. We just started reopening our economy last week. So you will see if you 2 months down the line, now this stocks will pick up. April 15, America reopened the economy. So this stocks went up, right? You saw this stocks went up. Now India is behind 2 months. So you will see that sharply this small cap banking and materials moving up in next 2 months time. You'll see that rally here too. So what is the other trend, correct? So, what is the key industry? Today, I'm going to talk, instead of every industry, I'm going to talk only in two key industries which you need to watch. I'm not saying you need to invest in that. Uh, Here, why you need to watch on those industries, sectors, so that will give you a broad outline how the overall markets are going to perform. So, at the light of the global growth, so which is so airlines, they are the key for global growth. Without airlines, globalization, import, exports, everything will get hit, correct? So this is a key infrastructure sector we need to keep a watch on, and semiconductors. So computer chips. So I'm going to talk about these two sectors in today's webinar, and in next webinar I'm going to take other sectors, correct, going forward. So let's talk about airlines. So what to look out for airlines? So why I'm saying you need to watch for airlines. As airlines pick up, so is the global growth going to pick up. So airlines is going to be a catalyst for global growth. Now, I give you an example. What you need to look at the airlines. So if you take today, there are 24,000 commercial airplanes, including passengers and air freight, of which 12,000 are in US and the 12,000 in the other part of the world. This is US and this other part. Now, when the economy stopped, even at that time, 5,000 planes were in operations every day. In US, out of this 12,000, here, I don't think more than 2,000 planes were in operations anywhere in the world. Most of the other planes had stopped, correct? Now, we have 17,500 commercial airports in the world, of which 8,000 airports are in US. India has 400 airports where planes can land. Now, you need to keep a watch on this. This sector, as it opens more and more and recovers, you will see a massive run in the stock market, and so this is the lead indicator to watch out for. Now, air travel is a basic need of the global economy. So today we have 24,000 planes. They say that we'll require 38,000 planes in next 10 years time, and these are the numbers given here. I won't go through. And the maximum growth is going to happen in Asia. It's going to happen in Asia. So that this has not materially changed because of COVID-19. The assumption still remains intact. We'll see what happens in next 6 months' time, but this is going to continue to happen. Now, why airlines are very important? Airlines directly and indirectly employ 65 million people worldwide. That is equal to the population of France. And France is among the top 20 countries in the world, or top 10 countries in the world economy-wise, and population-wise in the top 20 countries in the world. Imagine this many people get impacted. So you will see massive innovation in airline industry. Now, I give you another example. When 9/11 happened in 2001, people were so scared in America that how we'll travel in future, because every plane can have one terrorist and have a bomb. How we'll come to know about it? So there was massive innovation in security. And see, today you can't even take one single nail cutter, you'll get caught, correct? So the security has become so tight, but at the same time it's so smooth, correct? And so safe to travel. So innovation happened. Same thing, they are going to come out with new innovative ideas on how to keep passengers safe from COVID-19, coronaviruses and all that. So you will see a massive innovation there, and they will come out with very good solutions, and that will come up very fast. Now, if you see the crisis management, how airlines are in the crisis management, there are different stages. So economies also go through different stages. So first we identify a crisis, so which we identified the crisis in February, and then initiate crisis management. They struggled February, March, how to shut down, correct, that time. Then they perform an analysis, how to manage your cash flows, define immediate measures, how to survive during that bad period. And now today we are at this stage. They are creating a restructuring plan, how to restart. And once that plan is put in place, the execution of plan will happen. So we'll slowly see opening of the international economy and trade starting this month. Already flights have started from US to Europe and Middle East in today. Flights have not started from uh, other parts of the world to India, but they'll start. I anticipate they are starting anytime. Regular flights. I'm not talking about Government of India flights to bring Indians back. I'm talking about anyone who can travel. That will happen in very soon because it is impacting global economy and it's impacting India too. So the moment that happens, you'll see a massive change. Now, coming back to the second, so you watch out for that. As that progress happens, the markets will go up. So what to look out for semiconductors? Why I'm talking about computer chips? Uh, the computer chips have become a basic and major part of our life. Because if these chips were not there, lockdown was not possible. Today, during lockdown, we could work from home, we can communicate with anyone, we can do online banking, we can online food because of all these computer chips. So innovation, and today computer chips are there in everything. So you name the things, Internet of Things, cybersecurity, social media, mobility, cloud computing, everywhere these chips are required and they are part of everything now. Now, I remember I bought my first computer in 1987 and I bought my first laptop in 1992. Uh, Very different, correct? This hard disk you see is of 10 MB. It cost $4,000 in 1950s, 5s, and 60s. Today, a 10 gigabyte, not MB, correct? 10 gigabyte pen drive cost you $5 in US. It's so cheap. And it's like a kitchen, correct? You can put in your pocket. And that kind of stuff, we have made a progress. I'll give you the computers which were used in Apollo 11, which landed on moon in 1969. And you compare that with your computers, your iPhone, the chips iPhone has. iPhone is 1 lakh times more powerful than the computer chips which were used in Apollo 1969. So imagine how much power you're carrying in your phone. And that is the technology. And you can't live without that technology. Now tell me, this technology everywhere, how many of us has invested in this technology? How many of our portfolio is in this kind of thing? We all need to have this. You may not have airline stock, that's fine with me, but you need to have a certain part of your portfolio in this sector because this is a sector for growth. Now, which are 95% or 90% of these chips are all made in US and they dominate the world. America is the only country which controls that technology, and that's why the 5G fight is going on between US and China. And US doesn't want the China to come up in that field because China has copied them everywhere and now dictating them, so they are scared of that. 5G, new servers work, everything is going to depend on this technology, so you need to focus on that. There's going to be a massive growth. Now, which are those companies where you see we all know about Intel because of a laptop and computers we use, but broadband, Texas Instrument, Qualcomm, AMD, and TM. So these are some of the top stocks, computer chip stocks, and technology stocks are of course Microsoft, Google, Apple, and those. We all know of that. Now every product which we are using, they say car is also a computer nowadays. Your aeroplane is a very big computer. Everything, trains, all this are run by computers now. The chips play very important part of that, and we need to make sure that we have a proper exposure to this investments. Now, in India we don't have any good companies except for no, I don't think we have any companies which are listed in India. So you need to participate in this sector through investing through US. There are different ways you can do that. You can participate in a mutual fund, or you can buy Nasdaq ETF, or you can also set up an account in US and invest. There are different ways of doing it. So take proper advice from an appropriate advisor. But everyone needs to have a proper exposure in this sector. This sector is going to grow. So how does this sector perform in last few months, it from March 15, this sector has given 52% return, where S&P 500 has grown by 30%. So this is one of the best performing sector, and it's going to continue to outperform for next few years. You'll see a massive growth there. Now, I'm coming to the end part of today's my webinar, and here's the knowledge question I'm going to ask today. Impact on globalization because of COVID-19. Are we moving backward or we are moving forward? Is that globalization going to be more or less? Think about it. Most people say that it's going to be less. I'd say it's going to be more. No, we are going to see more globalized world, because these computer chips, they are going to integrate the world into a more smaller space, and we all are going to be more dependent on that. And technology is going to connect the world even more and make the world more smaller space. So we need to focus on that. And in my next webinar is going to be on trends, in which again part 2 of my global trends, and it's going to focus on automobiles industry. So yes, automobile industries are going to continue a major important role in our life for next 20-25 years, and where you need to focus and how it's changing, I'm going to talk about that in our next webinar. And if you like today's session, I would appreciate that if you can subscribe to our channel on YouTube, and you'll see a lot of you can also see my past webinars. They are all on YouTube, and you can watch them anytime you want. And I appreciate and thank you for attending today's webinars. Now, before I take the questions, I would also like to thank my team members. So this webinar is a joint effort of all my team members in India. They help me in working. I'm sure many of you know them. Samir, Jaideep, Sanket, Priya, Pooja, Aniket. They are all my team members, Vishwas and Rupali and Sonia from Bombay. And this is a combined team effort. And thank you very much. I thank them for helping me in building this nice presentation. Yeah, so my next, let me take the first question. You think airline will bounce back? Yes, airline stocks will bounce back, but I wouldn't recommend investing in any airline stocks in India. I would never recommend anyone buying any airline stocks directly, because it's a very volatile sector. You buy an ETF, you buy a mutual fund, invest through this sector through a mutual fund. Don't play the stock market, because you see what happened with Jet Airways. You see what happened with American. Even Warren Buffett panicked in this, and he sold all his airline stocks. So the best way to play an airline is buy an airline mutual fund or ETF and appropriate. And I would not recommend buying an airline stock in India. I would go in a global ETF. Yeah. So my next question I have is, how do we see a volatility in the next 3 to 6 months? Yes, there is going to be volatility, but the volatility is going to be your friend and not your enemy. You will see markets going up 10% and correcting 5%. You are not going to see the bottom, what we saw in March. Markets are going to be gradually going up, and you need to use this opportunity to build your portfolios, and you need to stick to your plan. Don't try to trade or make quick bucks. That would be my advice. Yeah, so the next question I get is, so airline stocks are so good. Does this mean that tourism will be back to normal? Yes, tourism is going to be back to normal. It will take some time, but yes, without tourism we can't live. Humans like to travel, and yes, 100% tourism is going to back to normal. And if initially the domestic tourism will go up, and then international tourism will pick up, but it is going to be in a different shape, correct? Now, the problem with some of the tourism industry will be, if they are leverage companies, they'll find it difficult to serve. It's how is the balance sheet? If your balance sheet is clean and you don't have debts, those companies will do very well. Yes. So I'll give you another example. I've seen another trend in America. I don't know about India, but in America, the same trend will happen in India too. People will prefer to use more Airbnb than staying in hotels. So I see that here in America. Um, homes, Airbnb, homes and flats, apartments listed in Airbnb are going very fast, whereas hotel occupancy rate is there almost 80 to 90%, whereas in hotels the occupancy rate is still 30 to 40%. I see that. The other trend which I see in America is people instead of flying, they are driving cars. So if I have to go from Dallas to Houston, I used to fly before. Now I don't fly. I drive. That's the other trend I see, because when you are driving, you control your own destiny. You control whom you meet and where you get exposed to. But when you're flying, you don't know who's in the plane, correct? And you don't know which kind of. So still, that trend I'm seeing. So tourism is already picked up here slowly in America. Uh, yeah. So my next question I have: which countries in Asia apart from India would have high growth potential? Yeah. Okay. In Asia, other countries which are having high is Vietnam is doing pretty good, benefiting more because of China problem. Like India, so biggest beneficiary of this political tension between U.S. and China is Vietnam is number one country which has higher benefit than India. Then you also see Japan. Japan has got least impacted by corona, though it has a number of old age population is higher in Japan, but Japanese have managed corona crisis very well, and there is a minimal disruption compared to any other economy in the world, and they have come out pretty clean. Their currency is very strong. So other than US dollar, the second most and strongest currency in the world is Japanese yen today, and their stock market is also doing very well. Mhm. Then uh, yeah, next question is, once we get vaccine or tablet, is it that the economy will move to the same which was earlier, or it is bound to change? Yes, the economy, okay, this is again a very good insightful question. They say in US the Dow and Nasdaq is supposed to hit fresh new highs in the first quarter of 2021. They're expecting a new high in first quarter of 2021. Now, uh, that's the at index level. So if it hits that, India also is going to that level. But it's the sectors and the companies will be different than what they went past. So there is a sector rotation which is going to take place, and you see that. So in India, you see already see Reliance is at 52-week high. You saw Avenue Supermart hit 52-week high. Nestle hit 52-week high in last 2-3 months. So in America, Amazon, Microsoft, they hit 52-week high. So the sector rotations is going to happen. Amazon was in January $2,000. Today it is $2,600. Uh, Apple also. So many stocks. So you'll see certain sectors coming out very strongly as a winner. Next question is, will another wave of reverting of stocks expected in the near future? We are not going to see the kind of volatility we saw in February and March, where the markets crash 40% in a span of just 3 weeks. So we had I'll tell you, 50% of stocks in America and some 20% stocks in India had a 52-week high in February 15th, and they had a 52-week low in March 15th. I've never seen that kind of fall in my life. I've been in the field of investing since 1980s. I've never seen this kind of the fast fall I had seen in my life. So you are not going to see that again. No, we are not going to see that again. We'll see corrections. We'll see small corrections, but we won't see such a sharp correction. Yeah. Uh, okay, which stocks needs to be added? So I'll take that. You think the present stock markets are for traders and not for investors? No. That's a misleading, very good question. This question comes up. The Okay, in 2008, you look at 2008, this kind of volatility was there. 2001, this kind of volatility was there. So if someone traded in those years, they must have made some money, but they lost the biggest opportunity of their life. Same is the case. This is not a trader's market. This is an investor's market. You invest in this market and just ignore the short-term volatility and forget about it for 2 3 years. You will make more money than the traders. Okay, in those who have patience. Okay, so I give this example to someone else, that 1 multiplied by 0 is 0, correct? And 0 is the patience. So if you don't have patience and you multiply by 1, you'll get a 0 answer. In investments, 1 is a patience. So 1 multiplied by 1 is 1, 1 plus 1 is 1, 1 plus 0 is 1 again, correct? So you need to have patience. If you have patience, only those people make more money. The higher the patience you have, the more the money you make. Mhm. And I have learned very hard way myself. I've been investing in 40 years, and many times I traded, and every time I traded, I made losses. Every time I invested and held to the stocks, I made more money. Of course, this applies only for quality stocks. If you invest in speculative stocks, no, I'm talking about companies with bad management. No, I'm talking about only companies with good management. It's an investor's market. In which stocks one needs to be added in current scenarios. Okay, now you should not build your portfolio based on current scenarios. You need to work on a very long-term portfolio. Identify 10 stocks or 3 sectors or 4 sectors, and build the portfolios. So the sectors where you need to be there is, one is telecommunication sector. Everyone needs to have in India, a part in it. Everybody needs to have a global stocks of like US and Japan. Everyone needs to have FMCG stocks, good consumer stocks, and good banking stocks. So these are the portfolio you need to build. These sectors you and pick up the best stocks in that field. You should do very well. Okay, do you see, the next question is, do you see that airline industry will stick to business related travel rather than leisure related travel in the short term? Very good question. Okay, I think it's the reverse. Airlines will first have to, business related travel is going to take more time, because today, if my company is sending me to travel for business related, and if I get COVID-19, my company will be held liable. So companies are reluctant to send their employees to travel. Uh, so commercial traveling, office related travel will be slow to catch up. The personal travel will be the easy to catch up first. So airlines are going to focus more on the tourism related travel first, and then office related, and they will give more incentives for traveling, and we will see that change. Yeah. How do we see we are covered as a part of the Simplicity Investing team for world after the first and last global lockdown? Good question. Yeah, I'm not going to share every details, but at high level, I'll say we have investing on 90% of the portfolios. We are investing in companies which are debt free. The biggest losers in this COVID-19 is companies which are in debt, correct? So you build a portfolio in the debt-free companies and in the sectors which are going to grow, and every company in your portfolio should be either in number 1 or number 2 in that sector. If it's a number 5 or number 7, then it's going to be in trouble. So if you build a portfolio, then again, if you see our portfolio, we were heavily invested in pharma, which we did very well. We were heavily invested in US equities, which also did very well. Technology also did very well. The Indian cyclical stocks, where large cap and MNC stocks didn't do well, and the banking was the worst performing. But we are now overweighting banking, and you build the portfolio that way. You should do fine. You should do fine. We did pretty good as far as 60% of our portfolio, not 60, I would say 50% of our portfolio was positive, even in this bad times. I'm saying 50% of our selections was giving positive returns and 50% was giving negative returns, correction, mark to market. But we see that changing very fast. Do we feel there won't be much fall again since we see a war-like situation? Each country is gearing up for war. Okay, again a very good question. I see a lot of turmoils happening worldwide. Instead of war, I would say there is going to be more riots, social unrest, because poor people are getting affected more than the rich people everywhere in the world. And I expected riots, but what surprised me, the riots took first place in America than any other country. Uh, we'll see some of the governments being overthrown. I don't see international wars happening like India and China that on a big scale. We'll see small tension happening because there's a US election. Let me put it this way: every time there's a US election, every 4 years, in last 6 months, there is somewhere geopolitical tension happens, because those countries know that US is not going to focus on them. The US presidential and this is going to focus on their domestic policies. So that time they take advantage of that. So we may see that happening this time also, like North Korea does that, Iran does that. But I don't see a major problem that, no, we won't see a full scale war like India, China or that. Sure. Okay. Okay. Where should I invest, in mutual fund or direct equity? Or equity is easier to liquidate? Yes, equity is. Yeah, this is a very good point. Equity is easier to liquidate, but equity is also more volatile, and the temptation to liquidate fast also is a dangerous temptation, correct? So you get out of the market fast and then you miss the bus. I've seen most of the people got caught wrong footed in US. My friends, many of my friends exited in the month of April, and now they are struggling to get back into the market. I would say there should be a balance based on your risk profile, but no one should have more than 40% equity. 30-20% equity and 70% mutual fund is a reasonable ratio. There should be a balance. As I said, mutual fund moves in a steady way, but it has a lower downside than equity. Equity can swing very wildly, correct? So we have a proper mix and build a portfolio. And with that, I end my today's session, and I thank you everyone. I appreciate, and I look forward to see you next week again. Not next week, a week after that. And I'll be continuing with this trend on post COVID-19. Thank you very much. Have a wonderful day. Thank you. Take care. Bye.